about agreements with bilateral creditors in principle and issues around Ghana's recovery story. The government says we've turned the corner. There's debate around that. People are concerned about an austerity program, increased taxes, a squeeze on incomes. Even though inflation is falling, people are complaining they can't feel the effects in the pocket. Dr. Leandro Medina is the resident rep of the IMF. He wrote an article which has gained some prominence in the news, and it's an interesting read. It says, let me just read the intro for you. It says, Ghana transforming a crisis into a journey towards prosperity. We'll talk about that and other things on the show. Good morning, Doc. Welcome to the show.
Good morning, Bernard, and very good morning to your audience.
Every time you come here, there's a football problem. I think the last time you came, 2022 or sometime, 2020, there was a World Cup and Ghana wasn't doing really well. You've come back and we've been kicked out of the Africa Cup of Nations. So I'm not even sure if I should be inviting you here that often, because even the friendly match between Ghana and Argentina has even been cancelled. So I don't know. Anyway, you are welcome.
Thank you, Bernard. And on football, I mean, I think now after 36 years and now for 4 years, I'm not going to complain about football.
By the way, so where are we? Because I think there are a lot of big stories in the past week. I think 2.5 weeks ago, there was the announcement of the second tranche of 600 million. Then there was the publication of the first review of the 2023 Article 4 consultation. And then there's also the blog, the article that you wrote. This obviously related. Just give me a context of why these things are all happening at the same time.
Yes, and this is extremely important, and I could say a very important and very good news that on January 19th, the IMF Executive Board completed the first review. This is the first review of the 3-year program, and was in a sense together with the Article 4. In the Article 4, we look at more like a medium-term issues. Regarding the review, the completion of that review essentially allowed for an immediate disbursement of $600 million US dollars, which essentially was the second milestone after the program approval in last May, which allowed for a total of 1.2 billion to be disbursed in only 9 months. The road to completing this review has not been an easy one, but thanks to decisive actions and transformational reforms by the authorities, and this is linked to the article, early signs of stabilization are emerging, and you already mentioned some of them. We are talking about decreasing inflation, increase in the Bank of Ghana reserves, and a decrease in the exchange rate volatility.
So you're saying these are early signs of recovery. So when the review is done, what are the main things the fund looks at to determine if a country is making progress? If you can give a bit more detail, what are some of the details of what you look out for, those benchmarks that you hope to see?
No, absolutely. And so let me go through two different things, right? So one is what we look at when we do a review mission. The review mission, you may remember, happened in October last year, where we reached at the end of the mission what we call staff level agreement. And that mission assessed two things. One part is backward looking, where we look at end June numerical targets, and then we look at all reforms that need to be done within a certain period. And also there is a forward-looking component of the review, which at that time look at for example, the 2024 budget. In terms of performance under that review, which was completed by the executive board on January 19th, the performance has been strong, has been quite compelling. Both in terms of numerical targets, that were the ones that were assessed at end June, that has to do with fiscal aggregate, primary balance, reserve accumulation, as well as the implementation of certain reforms that are what we call the structural benchmarks. Just to give you a few examples, the energy sector recovery plan, the medium-term revenue strategy. All these are different benchmarks under the program, and the performance has been quite compelling. It's important to note that despite a very difficult external environment, when you look at the macro, it has been quite resilient. When you look at growth, we had to upgrade our own projections because growth in 2023 has been more resilient. As I mentioned before, inflation has been on a decreasing path from a record high of 54% at end 2022 to 23% at end 2023. Reserves have been increasing. The exchange rate volatility has also decreased.
Interesting. So these are the numbers: growth, inflation, the primary balance, the fiscal deficit. All these things tend to move in the same direction. So on that front, you say that we've made progress. There's a sense in which people think that the IMF is too eager to sell a good story. I mean, the speed with which I think some members of the board initially, even last year, in fact, 2022, announced that they were willing to give Ghana a program was quite interesting. And then when we look at the narrative of the review, some of the things you've said, some people feel that we need to look a bit more closer at the effect of these numbers on people's lives before we can conclude that Ghana has turned the corner. But the narrative of the IMF seems to be that, well, progress is being made, we're on a journey to prosperity, and therefore we are not being as rigorous. In fact, Bright Simmons gives an example of how when we were announcing the agreement with bilateral creditors, in the Zambia case, there was a definite, at least, there was more clarity on the numbers. But he describes the Ghana statement in comparison as more open-ended. So 2 questions there. Is it true that generally the IMF is keen to sell Ghana as a good story? And then the example of, for example, this whole idea of the bilateral creditors and how that became the big announcement before the second tranche. What's your comment?
No, absolutely. So let me try to answer to both questions. So first of all, the support from bilateral creditors is critical for Ghana, and you may remember what happened, before we were able to go to the board for the approval of the arrangement, is that we needed the official creditor committee to be formed. These are essentially the sovereign countries, right? To form a committee that is co-chaired by France and China, and to provide financing assurances. That happened before May last year, and that allowed us to go to the board. Then extremely important will happen now, that an agreement between the bilateral creditors, this is the sovereign countries, sovereign creditors, and the Ghanaian authorities was reached on a debt treatment, and this is what allowed us to go to the board for the first review. Regarding where we are and what is the narrative, I think it's extremely important to see where we were, where we are, and where we intend to be. By no means we are there. So when we say that we see early signs of stability emerging, this means that, for example, inflation is down from 54 to 23. 23 is still high for inflation, and it's way above the BOG target, correct? But we are getting there. We are on the right track. The critical reforms have been made. Critical actions by authorities are being taken, and we are on the right path. Are we there? Not yet. There are key objectives of this program by authorities, right? That is the restored macroeconomic stability, secure debt sustainability, and lay the foundations for a durable and higher and more inclusive growth. We are not there yet, but we are on the path.
But let me push you a bit on that sustainability. So again, when you look at the bilateral debt, it constitutes less than 5% of our total external debt stock, right? When you then compare that to, say, domestic debt stock, which is very high, and then you look at, for example, the fact that the debt service pressure is increasing. Okay, so whilst the bilateral agreement is important, if you look at the overall debt stock, domestic debt is a big issue. It seems as if we pick and choose which of the measures of debt to use to tell a good story, right? I mean, we are told that in nominal terms, domestic debt service is climbing higher at a faster rate today than it did pre-crisis. All right. I do understand that there are many people the country owes, and the implications of owing Eurobond, bilaterals, and domestic are all different. But should we not be a bit more comprehensive in the way we say debt sustainability is being attained, instead of highlighting just the bilateral? Why don't we look at the domestic? The government is also borrowing a lot more T-bills, so on the short term as well. There are concerns there. So I just want your general thoughts around the debt mix and how we are able to say that we are achieving debt sustainability when indeed some components of debt accumulation are actually going up. You get my point?
Absolutely. So it is very important to say that the authorities embarked not in one debt operation, not in two debt operations, but in three separate debt operations, encompassing all debt, right? So domestic debt operation that was successfully concluded last year. We took care of the domestic debt. External bilateral and external commercial. External bilateral has to do with the sovereign creditors and is related to the agreement that was reached under the G20 Common Framework, which is what we were just discussing, and also the debt with the commercial creditors. And they have been making progress in all these dimensions. On the domestic front, the operation was successfully concluded last year. On the bilateral front, progress has been made, and an agreement in principle has been reached recently that allow us to go to the board. And also with the commercial creditors, there are discussions going on, and the government, with support of their financial and legal advisors, are discussing in good faith with their commercial creditors.
So some targets have been met, as you said, and as we can confirm. Inflation rate has come down. This is good. The primary fiscal balance, which is a measure that's very important, has also been reined in. So that's great. GDP projections have changed. That's good. Zero financing of central budget is holding. So we are happy with those. But there are concerns around things like the net international reserves and the fact that the government's gold purchase program just masks a weaker net international reserve position. In fact, if you go into the budget, what the government did was to announce the gross reserves. It did not, at least I did not see the net figure that clearly. So my question on that front is that, again, can we say there are 5 things, 3 are good, 2 are bad, so we're okay? Or should we look at each of them rigorously and say, look, if your net international reserve position is not strong, you need to deal with that as a prerequisite to the disbursement? Because the concern that some have said is that if the IMF sort of glosses over those, then you're kicking the can down the road, so that the real reform the government needs to make to bring change is not happening. So what's your response to that?
So just to clarify, so all the quantitative performance criteria have been met.
All.
Including
the net international reserve.
Actually, it went well beyond our objective for the test date. So I recommend you to please have a look at the recently published staff report. I recommend you and encourage you and your audience to look at the staff report. You have all the documents. You have the debt sustainability analysis. You have the program by the authorities on their own voice. You have the technical memorandum of understanding where you have all the definitions for the variables. I mean, I think I could really encourage...
So these are your reports. I was pointing to the net national reserves on the basis of what the government puts in the budget. And in the budget, they announced the gross reserves. That's my point.
The budget was prepared last year, right? And so I would suggest you look at the staff report, because this is how we define the net.
So the latest staff report is 2020. Is January.
The latest staff report was just published.
All right.
Yes.
And it uses information from the budget. It
uses all available information presented by the authorities. We interact with the Minister of Finance, BOG, and Ghana Statistical Services, and this is the staff report for the first review. remember that at the time of the program approval, we issue also a staff report. Now we issue again a staff report for the first review. And this staff report will look at all the targets and what was the initial target and what was the outcome. And in terms of the QPCs, which is the quantitative performance criteria, all targets have been met.
So you're confident that the level of reforms we're seeing are far-reaching enough so that by January 2025, we would not see, because I think the problem in Ghana has been the frequent resort to the IMF and the fact that even the previous program was not properly concluded before it was exited. So the concern is that the government is doing everything possible to just, or doing the least it can to get the tranches given to it, so that after election, whoever wins then has to deal with deeper problems, because a lot of the debt payments have been frozen. So by 2025, a lot of payments are due, and essentially that then kicks the can down the road. So I just wanted you to talk about that the IMF is not allowing the government to do the least possible, so that when they finish getting the disbursements, the real hard work has to begin, and by which time probably there's a new program.
So the program was approved only 6 months ago.
Yeah.
And essentially for the last year, we have been interacting with authorities on the measures and reforms that need to be taken. And authorities have been very decisive in the key actions and reforms. But indeed, it's only 6 months old. This is the first review after the initial approval, and we have a total of 3 years. Very important to continue, making progress and executing this program, which promises to put the country not only on the recovery track, but essentially with the right institutions and reforms to get them not only out of the crisis, but in a growth, an inclusive growth trend.
Let's talk about some specific things. For example, in the program, we knew the government was supposed to do the quarterly review of electricity tariffs, because the energy sector debts had become unsustainable. So the quarterly review was implemented and is going well. But apart from one quarter in the past year, every quarter has had an increase in tariffs for electricity. Now, the government has decided to apply a VAT to electricity charge for the consumers above the lifeline threshold. So there are two issues there. The lifeline threshold is very small. So it captures a very small group. And then they are applying, or they intend to apply, the same VAT rate that they apply on goods and services to electricity, which is really a necessity, right? We're economists, we understand this. So I'm asking this because you always talk about pro-poor. So two things here. The minimum threshold that is excluded from the VAT appears very small. And number two, applying the same VAT rate, which could go as high as 21% on a necessity like power, appears quite punitive. So I don't know whether within the framework of the program you can comment on this. Is that not going to be regressive?
So in the context of this type of programs, where you come from a very difficult situation with very high inflation that affects the poor essentially 100%, right? And difficult reforms and actions, it is very important to protect the vulnerable. They are the most affected by this situation, and the authorities have been making some efforts to expand the most effective social protection program in the context of the program, and also measured under the program under the social spending floor. And just to give you a few examples, the Living Empowerment Against Poverty, the LEAP program, it was doubled in 2023. It was doubled again in 2024. We work on this dimension, of course, with the World Bank.
That's correct. But that was because for at least the past 5 years, it hadn't been increased at all prior to the first increment. So the LEAP payment had been very flat for a long time.
Well, but it's important to do it, right?
Yes. Well, my point is that it had been very low for a long time before the first doubling and the second doubling. Just to point that out. But go on. I'm just making that point.
No, well taken. But I mean, this is important interventions, 2023, 2024, and this is done with the support also of the World Bank. And this promises to decrease both poverty and inequality. On the education sector, allocations have been made to the Ghana school feeding program, has been increased. On the health sector, allocations to the National Health Insurance Authority have increased by 40% to deal with medical claims, essential medications, vaccines, and as I said before, this is extremely important and is being monitored under the program. So essentially, you need to protect the poor and you need to protect the vulnerable.
So on the poverty and the vulnerable side, I take the point, but there's a view that VAT on power could backfire in the sense that, in Ghana, there's a lot of uncollected electricity and there's a lot of illegal connections, the so-called commercial losses. There's a view, and I think some of that view is even in the ECG itself, that such a tax could lead to that. So I'm not sure if and this is not your policy, the government policy, but to the extent that the power sector and payments there are very critical to the program, has your team analyzed the potential effects of such a tax? Some people think it's going to be regressive, and some people think it could even lead to lower revenue for the ECG eventually. Don't forget, when the government introduced the e-levy, they had very fantastic projections. All those projections were found to be false. So whilst you want revenue to go up, maybe there needs to be a deeper thinking around something like VAT on power, so that the gains you've made in ECG ramping up its collection don't actually get reversed.
I think it's extremely important, as you said it before, when you look at the tax collections, right, they have been particularly low in Ghana when you compare with peers for years, right?
Direct taxes.
Also to look at the size of the informal economy in Ghana, which is also quite large, right? So it is important not only to look at the tax measures, right, but also at the size of the informality and how you can bring this informal sector into formality, so you can broaden also the tax base. And these are all dimensions that we are looking at.
I just wanted to point out that Ghana's low tax collection is related to direct taxes. On the indirect taxes, Ghana's tax numbers compare favorably. It's the direct taxes that Ghana has been very poor at. Property tax has been pushed as a more progressive tax. Very little progress has been made on that. As I speak to you, the transport unions want to increase transport fares by as much as 30%. The government has not agreed yet. But you see the effect of indirect taxes on poor people is worse. So whilst you're giving us LEAP, you're giving us school feeding program with the left hand, you're collecting it back, not you, the government, is collecting it back with transport fare increase, tariff adjustment, VAT. So when you take the overall state of the poor person, it's very tough, isn't it? So maybe you need to look a bit closer at your poverty reduction effort because of the point I just made.
We are working on that dimension. Again, we are looking at the most efficient and effective programs by the authorities, trying to support the vulnerable. We do that together, with the World Bank. So really taking that dimension into account in the context of the fund supported program.
What about an election year? Every election year, bar 2004, has seen massive increases in deficits. It's also seen splurging. This week we had election primaries, lots of allegations of money being spent. And this is just for within a party. You are running an IMF program, and by the time we're voting, there's going to be in the middle of the program, right? How are you preparing for that? And what kind of assurances are you seeking from the government to ensure that they do not splurge to win an election or to just do what they want to do, and then whatever happens afterwards, we are worse off than from the beginning?
Yes, so even when we were designing, at the design phase of this program, we knew that, if approved, when it was approved, we would have elections in the middle of the program. Mm-hmm. So essentially, by design, we have a set of actions and a set of reforms that would really, support the authorities in their effort to keep the fiscal path. Just to let you know, so for example, there was a fiscal effort of 4% in 2023. Another 1% of GDP is expected in 2024, and 1% of GDP is expected in 2025. So a 6% of GDP effort. And how can you assure this? So there are two dimensions, right? One dimension is to make sure that the right numbers fit the budget, right? So essentially making sure that your expenditure and revenue envelopes make sense, so you have the past. But that's only the plan. Then you have to execute it. Otherwise, you get into some other issues. So for the execution part, we have lots of reforms that have to do, for example, to bring MDAs into the give me. So I mean, different set of structural measures that support the authorities' effort in being able to continue to meet the targets under the program. And then, but let me say something else. There are two dimensions also when you said how we discuss with authorities and with the and in general with the political spectrum, right? So in terms of the discussions with authorities, we have a commitment at the highest levels, right? That they will continue to implement the program even in the face of elections. In the context of the political spectrum, we usually discuss with all the parties in the context of the Parliament Financial Committee, and we have a broad support, and the need for the program was broadly recognized. But even going beyond that, the measures that the country needed to get from point A to point B, so from the very deep crisis to essentially out of the crisis, it would be the same, no matter who is in power. So I think that gives you
just a quick point to not to overstretch the point. There's a view that so you have a 3-year program, 3 billion. You've given the first tranche of 600 million a few months ago. You've given the second tranche. The design of the cash flow is almost like you are front loading the big chunk of the money before election. All right. Now, if you want to ensure good behavior, you could. And I'm not suggesting that you shouldn't give Ghana money. You could start with the 300. Another 300 before the 600, so that the incentive to do the right thing at election is maintained. A chunk of the money would have come in before the election, right? So even if they decided to, in the last 3 months of the year 2024, spend wantonly on wild projects to win an election, you've already given them over 70% of the money.
No, so
do you understand my point?
I understand.
So
your point.
what in the design of the program election year, should the history of Ghana and the challenges that led to this not affect the cash flow in a more...
No, and I hear you, and incentives matter, but also the context matters. Go back to 2022. End of 2022 was especially difficult with very high inflation, very low levels of reserve, massive financing from BOG to the budget. So 2023 promised as the most difficult year in terms of the 3-year program, and that also has to do with the phasing of the program.
Just a final point on this. Some people think that the government is pushing a lot of the pain to the masses and the public sector and the private sector in the debt exchange. I mean, our monies with banks were taken, right, or reduced. The government itself, and if you look at the budget carefully, they have not reduced the public sector. There's no hiring freeze. There's no ceiling on wage increments. Ministries are getting bigger allocations, all right? But people who have invested with private firms have had to take haircuts. There's a lot of new indirect taxes that will affect our incomes. Again, when you look at the balance of things, there's a feeling that the government has not, they've not taken as big a hit. It's we, the people, and the private sector, the banks and co, who are taking the hit. The government is sitting pretty. And it must be shared. There's a feeling that even though the rhetoric is that it's burden sharing, it's not burden sharing in actuality.
Well, let me tell you, 6% of GDP adjustment in 3 years is quite ambitious. I have to tell you. 4% in 2023, 1 additional percentage point in 2024, 1 additional percentage point in 2025 is quite an ambitious adjustment by the public sector.
Just a final point on cocoa sector. There are usually 2 or 3 sectors we look at when we look at the macro. So whilst all the numbers will be looking good. The energy sector has come up for discussion. We've already discussed that. The cocoa sector, there was a story this week about some of the big cocoa producers not even getting enough beans. This year's crop, the target of 800,000 metric tons, we are told will not even reach 600,000. In addition to this, the syndicated loan, this is the lowest amount we got in a long time with the highest interest rate. Putting all that together, the cocoa sector doesn't seem very healthy. And in Ghana, if you're looking at the macro numbers, cocoa sector, energy sector, very big. All right. So again, is there a sector-specific review by the fund on the cocoa sector? Are you concerned that the dwindling fortunes of that sector could erode some of the progress that has been discussed previously?
So we are looking, effectively, we are looking at the energy sector and the cocoa sector, again, together with the experts from the World Bank, from the African Development Bank. And essentially, you will see in the staff report how we are dealing with these sectoral related issues. Especially, just to give you an example, in the cocoa sector, basically, stopping the quasi-fiscal activities, just focusing on the core activities of COCOBOT. So, but that's only one part of it. There are many things that we are really doing, both in the cocoa sector and the energy sector, together with other development partners.
So finally, what's your promise to us in terms of the program and its implementation? How optimistic are you that today is 30th January? If I got you back in 6 months, how optimistic are you that we will be making progress? If I June 30 and you came back and said, look, let's look at the past 6 months based on what you've seen so far.
So I think it's extremely important to say that this is a marathon. This is going to be gradual. We went a long way since we started working on this program. Key variables are going in the right direction, but there's still a long way to go, and the recovery will be gradual. So in terms of our next steps, we have concluded and completed the first review. Now we are in preparations for the second review. A mission will come to town at some point, I would say maybe early April, and then hopefully we are going to be discussing a very successful performance also for the second review, and we expect to go to the board at some point, hopefully before the end of the first half of the year.
Hopefully we'll talk to you again. Thank you, Dr. Leandro Medina, who's the resident rep of the IMF in Ghana, talking about Ghana's progress with the IMF program. Another $600 million released in the past few days. The World Bank also gave a facility to buttress that. So Ghana seems to be sitting pretty on the inflow side. There are concerns about whether some of that can be reversed as the election draws close. But he says it's a marathon, not a sprint. And there have been things put in the program to ensure that that does not happen. Thank you for being on the program.
Thank you.